Hey, Michael Turner with Wells Fargo. Thanks very much for taking time and for all the content we provided. It's an investor session, so I'll start with the target model question because Stefan just laid it out for us. So margins showing clear progression, particularly relative to where we stood at the IPO. The growth assumption tweaked a touch from above 30 to now the squiggle line 30%. Can you just frame out, is that tied to just sales capacity being at a different point versus what you were previously expecting? Is it a change in the macro? And actually, one of the questions I feel most often is how to think through Confluent's growth in a rebound recovery scenario. So it's not the world we're in currently, but can you just help us think through some of the inputs on that side as well? Thanks.
Well, on the top line growth, we're resourcing the company to be growing at approximately 30%, and a lot of that is a reflection of the macro. We've been very much focused on preserving and increasing sales productivity and capacity, I should say, and that's something that we're going to be looking at continuing to do, but do it judiciously. And then as far as if the economy rebounds down the road, I'm sure that would benefit lots of companies, including Confluent. The last thing I'll say is, as I think about the structural drivers of growth, we have a wonderful go-to-market organization, but the product teams that are working not only on the Confluent Cloud product, but the upcoming Flink product that will be released, that should help maintain our growth rate. And in some scenarios that we've run, it could be an accelerant. And then we haven't really baked in anything material on the role of generative AI in the short term. We think that that's going to play out in the enterprise over a longer period. But that's something that we think about because we're really excited around what our customers are going to be doing with generative AI, and we should be a beneficiary of that. But I think this is going to play out over time as opposed to something more immediate. Yep.
Great. Derek Wood at TD Cowen over here, and you just led into what I was going to ask about in terms of new product efforts. And so you mentioned, Stefan, that FedRAMP and Flink are, you've got certain expectations around that. If you guys could walk through kind of what the milestones are to expect, Erica, how you're thinking about the go-to-market focus once they come out, especially around Flink, but also what you're doing with FedRAMP. And then on the generative AI side, what you guys are potentially doing to lean into that opportunity right now.
Yeah, there's a lot there, so maybe we can divide it up into chunks. I'll start with the generative AI one. Yeah, we laid out a little bit of the kind of architectural pattern we're seeing with customers. I think there's additional investments we can make that will help make some of that easier. But the big opportunity is definitely the flow of data to power these models and the actual application of this to streams of data that customers have. And so that's what we want to make easier and easier. We have, I think, very big aspirations for Flink. It's kind of logically understandable that monetizing the compute and streaming applications will be an obvious vector of growth on top of the streaming data that we already have and kind of naturally combines with what's there. The key milestone that everyone should look to and expect is the GA of our Flink SQL service this year. We've communicated that was coming. We've seen good progress against that. It's in early access with customers now, but that's kind of the key thing that will unlock monetization next year. And we do expect that will ramp like any cloud service. It's not 0 to 1,000 on day one. That will roll out to customers who will bake it into their applications over time, and we'll be adding capabilities and some of the other Flink APIs, so we'll open up more monetization off of that over the coming years. So that's going to be one that we think can be quite significant. We think the opportunity around stream processing is as big as the opportunity around kind of core Kafka itself, and it will play out over a number of years as we grow into that business. I think there were several other side parts there. Do you want to remind me?
There's one other on the FedRAMP focus.
Yeah, that's one for us as well. For those who don't know, it's a key certification for the federal government. So when we look at our public sector business, that's contributing quite substantially today, but it's contributing almost entirely with Confluent Platform. And a lot of the public sector U.S. for the federal government is cloud and requires that certification. That's something we're actively working on. And as that unlocks, we should see acceleration in that part of the business.
Hi, Rob Owens from Piper Sandler. Do you want to square that comment with something Stefan said relative to Flink? Because you talked about it as an accelerant, but not incremental. You held your $60 billion TAM, which is enormous given the scale of the company, but why isn't it incremental at this point? And how should we think about that opportunity? And then Stefan, just to nitpick a little bit, you did raise gross margin by 1 point, but operating margin stays the same for the year. So where's our extra point go? Thanks.
I'll take the first part there. So yeah, the way we're modeling that in TAM is primarily in it shows up in multiple places with stream processing, right? It shows up in some of the cannibalization of older integration tools. But I think the most significant is when you look at that segment of database usage, that kind of 9% of database usage, you could look at that number in different ways, right? You could say, actually, if you look at the scope of batch processing, that's actually a little conservative. But the most important variable is not, hey, how much of the database market, which is quite big, are you taking? It's actually the pace that you take it with. And so the reason we're not calling it TAM expanding is we already had that database segment in there. We already had some pre-existing stream processing capabilities. This is really about getting that 9% faster, increasing our probability of really winning that segment of it, and really bringing that into the monetization of our cloud. So you can think about it either way, but we kind of had that in scope already, and this is just a better way to get it more quickly. And do you want to take the second one?
Yeah, on the gross margin side of the house, we have a track record of at least delivering the operating margin guidance that we've delivered or beating it. And I would say that from an operating margin standpoint, the kind of like the cushion's gotten a little bit better with the improvement in gross margins. And we've been targeting roughly break even for Q4, and that's something that we continue to do. And the improvement in gross margin for the back half of the year is something that gives us even more confidence around the break even for Q4 23.
Hi, it's Greg Moskowitz from Mizuho. Thanks for the presentation today. Question for Jay or Erica on TCO and ROI. So you've done hundreds of TCO assessments for your customers, but that's a pretty small fraction of your install base. And the data that you presented was so powerful. And I'm wondering how you can ramp up these assessments to drive even more transparency, even more business value.
Yeah, do you want to take that, Erica?
I'm happy to take it. I think it's an opportunity, and something that we're focused on, especially in this market, is going out in a more scalable way to be able to do those types of assessments. So that's actually a key strategy of ours right now. But I think it's important, as we've talked about, both in the sales cycle to prove kind of the why do anything, as well as in retrospect help customers quantify the savings that they've realized. So yes, we want to do that across more of our base in a more programmatic and scalable way.
Hey guys, you have Mike Sikos here from Needham. The question for you is I understand the pull of real time, right? If we had been batching on a monthly basis, you go down to daily, even micro batching, it just seems like a workaround towards getting more and more towards real time. At the same time, you guys have put in place things to reduce those barriers to adoption, like custom connectors. My question is, as you see these customers going on this journey, are some of them altogether skipping going to, let's say, Kafka first and just jumping right to a commercialized offering like Confluent, or no, does the customer journey still require that initial pain point on managing that infrastructure yourself in that Kafka environment?
Yeah, that's a great question. So one of the things we believed really early on is that the natural journey in cloud starts with cloud. It doesn't start with downloading some piece of software, running it, realizing it's hard, and switching. And so, yeah, indeed, a lot of our customers directly just sign up for our cloud product and start using that as their very first thing. And increasingly, the scope of that product is well beyond just Kafka. And we view that as a good thing. That's kind of the natural way of starting with a cloud offering. However, as I think Erica laid out, and we laid out in a number of these presentations, there's a ton of open source Kafka. So that Kafka conversion motion, we also want to be really, really good at. And even for those who are starting with our cloud product, in the back of their minds, as kind of the alternative would be, well, we could run it ourselves, right? And so that kind of TCO analysis, some of the other aspects of that still matter in terms of the differentiation. But yes, it's absolutely the case that a significant portion of our customers are just kind of starting in their first project is on Confluent Cloud rather than a kind of open source adoption and conversion over.
Hi, Howard Ma with Guggenheim Securities. Can you comment on adoption or expansion use cases between Confluent Cloud only? So those who start on Confluent Cloud only versus your hybrid, and for those hybrid customers, do you expect them to eventually all convert to cloud? And if they do that, what does that adoption look like? And if you can, I guess one last part is if you can comment that within the framework of the 5 foundational elements of so it's going to be more on the process side on Flink, or is it more governed or data sharing as well? Thank you.
Yeah, maybe I can start with kind of what's the end state, and then the rest of us can jump in on some of those other aspects. So yeah, we in the very end state, perhaps everything will be in the public cloud, like all applications. But it is a very end state. When you look at how enterprise technology moves, it's not that quickly. Many of our customers still have significant mainframe installations, right? And so there's many generations that they've built out. And even if you looked at that graph of enterprise spend I showed earlier, the cloud was largely an addition to an existing on-premise footprint spend, which has kind of flattened off. But all the growth came in the cloud. And so why is that relevant? For this technology, it has to be where your applications are. And so the critical question is, when our customers are going to not have anything on premise? The answer we're hearing from customers is like not anytime soon for kind of large mainstream enterprises. We're open to it. We love our cloud business. It's extremely successful. If there, some of these are growing very aggressively and will be out of their data centers, and that's a real plan for them, and we'll serve them entirely with Confluent Cloud. Some of them will be on-premise for a long time. Regardless, that outpost on-premise is very important to actually feed some of these newer investments in the cloud product. And that's a barrier, that's a moat for us covering all of those. And there's a lot of kind of, difficulties that are not obvious in how data flows between these environments and making that something that's safe and secure and governed and done well. And it's actually a driver of growth for Confluent as well. So to your end state, the short answer is it will follow the overall migration of enterprise to the cloud, which I would expect will continue to be at pace, but we'll still have some on-premise footprint for a long time. And I don't know if folks want to jump in on some of the other points there.
Yeah, I think just briefly, like our hybrid model that you should think of as an enduring strength. I think that there will always be data in various different outposts across the organization, including in various different places on-prem or other hard-to-reach places. But it's not just about where the data is, it's about where it's flowing to. Right? So you need to be able to get it from where it is and make it flow to where it needs to go to. And all enterprises are complex and dispersed by business unit, by function, by geography, by office. And so when you look at some of the capabilities that we're offering, we are going to where the data is, that hybrid deployment model you just talked to, but we're also offering these global capabilities on top: governance, processing, sharing, connecting. And so organizations are looking to put their data to work wherever it is, but putting it to work means governing it, sharing it, and pushing it across all the rest of your enterprise. So I think there will always be those outposts, but our global capabilities of the 5 dimensions you talked about are what really adds to that ability of the data to go anywhere it needs to be, in any way it needs to be used.
Great. Can you hear me? Hey,
We can hear you.
Can hear me. I must be hearing the echo behind me. Tyler Radke from Citi. Good to see everyone. So 2 questions. One, I was, with a lot of the slides, it was pretty clear there's still a huge opportunity, right? You only have a low single-digit fraction of all the Kafka users out there. I was wondering if you could give us an update on the success of the paywall change that you made. I think it was about a year ago. Some of your peers, like MongoDB, talked about a record number of customer adds this past quarter. How are you expecting that to trend for your business based on what you can see in the top of funnel data? And then second question, just on generative AI. There's been a lot of excitement in the investor community around vector databases and vector search. And I think at your current conference in October, you had some customers talking about how Kafka is used to interact with vector data. So I was just curious if you could comment on the vector opportunity and whether you believe there'll be new products from Confluent to address that opportunity.
Yeah, those are both great questions. So on the topic of the total customer count, what's the interaction with the paywall? Yeah, at that very first step of how do you spend your first few cents with Confluent, our goal is to make it as easy as possible for customers to get going. That's gone pretty well. I think as we've removed that means that a lot of our open source advocacy can now directly start with our cloud product. It means that, that kind of early development can go, in many cases, totally unmonetized. That does, have an impact on the total count, but we think probably leads to more, 100K plus customers over time. We're really focused on getting those sticky customers that are going to persist rather than trying to monetize the early experimentation for the obvious reason, in that chart and kind of ramp up that Erica showed that, there's lots of people kicking the tires. They can kick the tires with Apache Kafka, but we would rather they kick the tires with our cloud product. The monetization opportunity really comes as it kind of starts to get to production. So we feel like that's gone pretty well and has really opened up the kind of direct integration of the product into the sales motion, into some of the advocacy motions, and the self-service side. I do think there's an opportunity to further accelerate customer acquisition. Like when you look at the raw numbers, another way of asking the same question is like, hey, 4,000, maybe heading towards 5,000 customers, are you happy with that number as a percentage of the total Kafka count? The answer is no. Like we think it should be much higher, and that's absolutely what we're building towards. To get to that, it really does mean, driving down the kind of amount of friction of adoption of cloud. I think it's something Mongo's done an excellent job of. And as you do that, you kind of access this broad pool of users. And that's definitely a focus for us. To the second point, the key question with AI is exactly what I said. How can I combine the kind of unique and private data of my enterprise with this kind of general purpose model that has some understanding of the world? And if you think about how humans do that, sometimes it's by memorizing a lot of facts, i.e. training, but sometimes it's by looking something up and giving the answer out of a book or a computer. And both of those strategies are going to be pursued to some extent. The vector databases or direct lookups are kind of looking it up on the fly. And that becomes increasingly, important in generative AI. If you look at what people are doing, say with the OpenAI APIs, their newer models don't even allow fine-tuning, let alone like retraining with your data. So it is all prompt augmentation and what's out there. They're adding some of that stuff in. Some of their older models do have it, but it is all about how do I get this data at the right time. And that can be either by direct lookup, or it can be out of a vector database, which allows a more inexact search. So for those who don't follow this stuff, effectively a vector database allows me to take the model of language that my LLM has and apply it on my data for indexing. And so which of those strategies will win out, I actually don't know. And even within the vector database world, there's like, a dozen of them, as well as a number of, existing things like Elastic and Postgres, et cetera, that have kind of vector capabilities. So it's a little hard to predict. The data flow into vector databases is easier to predict. We're predicting Confluent as the mechanism for that flow. And so, yeah, whether it's an exact lookup, an inexact lookup by, aggregating data into a vector database, something else that we haven't thought of, I think that's why I was kind of pointing out that one of the safer bets in what is a very rapidly evolving ecosystem is in the data flow layer, whereas a lot of this other stuff is very much in flux, which makes it a little bit harder to call, the future state, whether that's, models as a service, models trained by me, vector databases, which vector database, other lookup mechanisms, regardless of which of those kind of forks in the road you take, the fact that your data is spread across 117 out-of-date systems in the wrong format and not supporting kind of real-time load and lookups, that's a problem you're going to solve with data flow of one sort or another, and we think the basis for that is going to be Confluent.
Sanjit Singh, Morgan Stanley again. Thank you for all the content today. Really appreciate it. I had one question for Erica and then one for you, Stefan, and potentially Rohan as well. For Erica, you talked about really doubling down on higher propensity to consume segments. I would want to define like what the lower propensity ones would be, because you seem to signal an opportunity both in the large enterprise as well as in the mid-market. And so I wanted to maybe get a sense of potentially where you guys are pulling back from.
Yeah, I would think of it as segments of any company size, within enterprise or within commercial, where there's high propensity for data streaming to reduce TCO and have meaningful ROI. So what are the industries that are making big bets on data? So certainly a lot of startups who are digital native, all digital native companies of all sizes. Financial services has been a very high propensity segment for us for a long time. Telco is another one. Public sector has been a great segment for us for a long time across both different branches, including Department of Defense, including different citizen agencies. And so it's less about the size of the company and more about what are the industries and the companies that are making big bets on data is how I would think about it. Yeah.
Great. I appreciate that clarification. Then for Stefan, on the pace of margin expansion of 5 to 10 points per year, should I think that as getting to that 5 to 10 points up to the target model, or is there any sort of considerations on whether some years below that or some years above that? How do I think about that in terms of the target model? And then the other part on the expansion business, and I think, Rohan, this was on your slides about talking about there being a really high margin expansion segment of revenue, which was encouraging for me to see because there's been other players in the space historically, like a Cloudera, where it wasn't land and expand, it was land and mini land. It seemed like the customer had to restart its investment after every sort of use case. So as you go from fraud detection to inventory management to whatever the use case was, it seemed like it was very costly for customers to do. So I was wondering if either of you could sort of break down the drivers of that margin expansion for the expansion business.
Sure, I'll take the first one. You take the second. Yeah, so the midterm target model of 5 to 10% operating margin is something that we're going to get to, over time. But so the rate and pace, once we get to that midterm target model, is really going to be dependent upon our ability to grow our top line revenue. And if we can grow at elevated rates, we're going to show what I would just call very modest operating expansion on our path towards getting to our long-term model. If revenue growth rate were to slow fairly dramatically for a prolonged period of time, we would have a faster rate to that long-term operating margin target. We think that the market is big enough where it's a very large market. There's a massive do-it-yourself Kafka market out there as well. We have differentiated technology. We have this great customer growth go-to-market motion coupled with what we think is the best engineering and product team in the space. And so we want to play to win, but we're also delivering this robust growth while improving margins, and that rate and pace of margin expansion is really going to be determined on that top line growth rate.
Yeah, and to your question, I think there are a few concepts that you need to put together to come up with the answer. And I'd say 3 things I'll talk about. Erica touched on her presentation. 50% of cloud customers start from PayGo. And then when you double click into that, 90% of our commercial customers are essentially start from PayGo. And then you couple that with our cloud net retention rates are greater than 140%. So that's the three. That basically tells you that a lot of our cloud customers start small in a frictionless manner with fairly low sales touch, right? And that journey over a period of time is more profitable for the company in general. And typically, as you go to year 2 and year 3, because of the expansion side of it, the incremental dollar of expansion is less costlier than the incremental dollar of land. So those concepts like put together is basically where my comment came from. And I mean, from a customer standpoint, of course, like consumption that we drive, the network effects and sharing of use cases, streams of data getting picked up by other teams, that's essentially what drives the incremental consumption that you see.
I imagine the cloud makes that easier going from use case 1 to use case 2, 3, 4, 5.
Yeah, I think that's absolutely. So like if you compare us to like a cloud era, I think there's a number of critical differences, but that's one of them is, the fact that, you can just continue that expansion in the development team with no kind of infrastructure effort, ordering servers, setup, operationalization. So a company can standardize on a technology and it can become just one of the ingredients used in virtually every application to some extent, so that expansion can happen over a very long period of time as applications are built and rebuilt and can be done without kind of a big setup and wait time period.
Okay, we've got our last question here. Thanks, guys. Matt Hedberg, RBC. This has been great. It seems like you guys are squarely positioned for Gen AI, and I guess the question is in the future, do you see a way to monitor or quantify the potential benefit that customers are attributing Confluent to Gen AI? Is it API calls? Is it some form of mechanism of monetization? And secondarily, Erica, when you're talking to these $10 million customers, where are they in their journey? Do you see the path to a $20, $30, $50 million ARR customer on sort of the high end of the Fortune 500 scale?
Yeah, I'll speak to the first half, and then maybe others can jump in as well. So we as Stefan said, we haven't included anything in the TAM around Gen AI, and I would say at this point it's just really hard to put like a number that we felt we could stand behind around that. It doesn't mean it won't be valuable; it just means we don't know what it is. And then I do think that there are opportunities for additional product features that will help capture that, make these use cases easier, play to the patterns. In part, we want those to kind of co-evolve with customers and with the ecosystem as that kind of settles out and we see people using it. That is one of the nice things about these kind of open, popular development platforms is that to some extent your customers and the larger community around the technology kind of shows you what to do. You just kind of watch what they're all doing and then eventually fold in the right thing rather than trying to guess upfront in a very fast-moving ecosystem and doing something that's totally off base that you end up supporting for eternity. If anybody wants to add on to that answer, please. Yeah.
I just thought one thing that I would add is like when you look at Gen AI, it's squarely in relationship to what we've all been talking about streaming and Flink. Consider, when you're chatting with a Gen AI bot, it needs to know everything about you, but not just everything about you at the moment you began the conversation. It needs to know everything about you as the conversation is happening. That's the whole point. That's what you talk to an agent for. Consider an agent for travel or an agent for any other type of business process. So when you, for example, are working with a bot, you're asking it about your travel, you're asking it to change your flight. You want to know if your bag's moved. You want to know if your rental car is going to be updated. You want to know all the follow-on effects of the actions that you're taking during your chat. So it might be obvious that you would need a platform that does streaming to bring together the profile of you, your flights, the flights that exist, opportunity for changing flights, your baggage, your rental car, all of that stuff that has to be brought together. That might be obvious. Now to do that, you have to have the streams, and then you have to use something like Flink to bring it together, to basically bring together all of those existing streams to produce a view of you. And then as time goes on, you still have to update that during the conversation. And so I think I'm just trying to illustrate that streams themselves are one thing. Stream processing is like yin to yang of streaming. It takes these existing data streams and makes them super rich, super powerful, and then giving that to a bot is what makes an experience feel like it knows you, feel like it can actually take action in the real world and do really powerful things. So your question is, how will we quantify that, monetize that? One thing you'll see is what we already see, which is that streams are valuable. Streams drive reuse. When streams are joined and enriched, they create even more valuable streams. So kind of it's a virtuous cycle where you get more and more consumption of those streams, and those streams become higher and higher value. Now, will we be able to directly kind of productize pieces of that? I think as time goes on, we'll be looking more about how the landscape evolves.
And it's worth mentioning that Flink itself has a pretty rich and popular machine learning tool set already.
Very good point.
Great. I'll take the second part of your question around what's the potential we see at the high end within, say, our Fortune 500 customers. Today I shared the example of a customer who's currently at about 10 million in consumption, and we can see in the near term 15. That customer is not a Fortune 500 company, not even close. And so that's just, just to put that example in context. When we met at Current last year, I talked about another customer example, currently already in the 10 million plus cohort, and this is a large global bank, and we shared that we have direct line of sight to 20 million plus cost for that customer. And I'm confident that there's potential for us beyond that, but that's kind of what we have line of sight to now. So we're very comfortable with that 10 million on average ARR potential across the Fortune 500 because we do see it play out customer by customer.
All right, thank you. This is the end of our Q&A section. We will now transition to a customer panel with 3 amazing customers.
Great.